Welcome to TradeTheMBI.com. This is John. This report is for the 8th of February. Well, and we talked about that we were still within this short configuration, even though we come down to a little bounce back point here. We were still fading and breaking into new lower ranges here with the DOC red. So we're starting to see a little bit of midterm buyers popping in here at the beginning of the day here. So we already had a little bit more of a dip follow through that's kind of based. And as I mentioned, we talked about this just presenting a little pop, but more likely it kind of bases a little bit before it reconstructs. We can already see some improvement in the shakeout beginning with this. So it's the start of it. May take another day or two before it finalizes itself. Short-term buyers have really been the ones that have kept this alive, and it didn't hurt that you were right at the time where all the new money for the month for funds and that was coming in. So that provided some support. The really fun one to look down is down here with our average true range that I always keep in here. Look at that. We had this, that we were in these ridiculously low numbers. Well, going back, if we go over here, I can look at what it was. We were in the 15 to 19 range for the longest time, and then to skyrocket like this is a huge shock to some people, but it's not really that traumatic. Because actually it becomes an opportunity if you know where to be. And we had plenty of warning on this, so it wasn't really a factor as far as not knowing that it was about to take place. We also had specific targets for it, and they were filled, so that worked out beautifully. You're stuck in this no man's whenever we get the cyan stuck between GSE red, shorts, and which is also the cyan up here. It looks like it could just be breaking out of that. If it does, that would be a little bit more of a positive. And then you'd want to see that orange continue its fade down to get a new buy setup develop. And that would be a strong signal. And from the NQ standpoint, it's not faring as well. It's still supporting off that same 6511, which is that last revisit of the positive extreme algo right there. I think it's just pretty much consistent with what we're seeing visually from the S&P. So the readings are identical, even if price action is slightly different, which I'm okay with. As long as my readings are in consistent mode, then I think that you're right in line with what our expectations are. So from our euro, we can see the decay starting to develop in there as we started to move up. Once the green broke below the red and we were above the 13.5 with the orange, we also saw the first sign. That's usually the earliest warning when you have really overbought. That was on the beginning decay here. We had it was funny because Isabella, my daughter, okay, so she wanted the positive retrace that was going to take it down into the 22 range. And she was just looking for the bottom range there in the 22.7 area, and it worked out beautifully. So it's it's continuing even now because there's still much more to be filled. We had the one right here, and then you move all the way back into this last setup, which potentially down to the 121. And you got to remember, this goes back to Draghi's comments about how they were outside of the range that had been agreed to, which was that 120 to 115 range that we had for so long, and sort of when Trump allowed that free market to sort of take off, we had that imbalance, and that threw things off. Plus, it also led to that wild ride up in the market. But, again, if we even look at that chart, I've talked about this for how many years, decades now? Markets fall 66% faster than they rise. So you had the entire year wiped out in just a couple of days. So, a month plus can be wiped out in a matter of a couple of days. And that's normal. It's not something dramatic, and it usually takes a little bit of time. Sometimes there's your immediate reversion back up when it's something that's off, but the market's been due for a reasonable correction for some time, and this was the first one. So it created a lot of excitement, but return-wise, if you play that volatility, you can actually end up making more in just those couple of days trading than most of the rest of the year. And That's just something to bear in mind. I know a lot of people get frightened when volatility rises and they want to reduce risk, but it's risk relative to your signals. If your signals are valid, then you have an opportunity for greater returns in a shorter time span. And of course, I'd have to shrink this chart way back down. I mean, my God, I'd have to squeeze it a mile to get back to that 113 target that was talking about for how long? As we had been artificially floated. So that's exactly where it should be heading towards. Shakeout is not that horrible. You're still getting a lot of flight into it just simply because of the safety aspect, but certainly still under pressure. And then this was a dramatic move. We saw the higher highs on lower shakeouts. We were warning about that one as it was going. We were still fairly decent just until we got to right about here where we started to cross over, and then we broke below the ABM yellow. We had the green go below the red, and we also started seeing our shakeout starting to fade. And then it increased the final day when we were well below the yellow at this particular point at the start. And now we have the full DOC spread. And of course, this is the thing about ETFs and regular stocks. They're slower than the futures readings. So you end up needing to be a little bit more advanced on the setups, which is why I like futures so much, because obviously it gives you a much clearer perception. But even off the warning, taking the ABM, like I always say, you can always trade it back in above if you need to get back into something like that. But we could see, and we had this whole list of positive extremes, and we talked about it all the way back from the breakout that happened all the way back here at 1170. So that's good news from an inflation standpoint, big time, which also affected gold. So lower expectation of inflation means that maybe there isn't this capacity in labor that is going to be squeezing things to the point that there's no return. And that's important because you still have decent growth, you get the tax cuts, and if you're still able to fill in the labor without causing massive wage increases, that's a good position to be in. Doesn't require any tightening by the Fed either. And that is the biggest question mark, is will the Fed tighten too aggressively? Bitcoin actually produced its first decent buy. We were talking about this the other day right over here, and then we ended up with cyan underneath red, right at 38% right here, and that proceeded to be a pretty decent move, and it sustained itself, maintaining it until we got right about here. And was that big a short? No, I mean, you're really you're looking at it from that 82.10 range, and then you're really looking for the 50% retraced at 79. So a little bit more narrow as far as the range, so less volatility from that kind of a dip. And then it produced a little buy signal without having steel over the 13.5 or anything like that. It wasn't a reset, so I don't expect it was going to be that big a punch, and it really hasn't been. Need to see that steel reset as well, but holding up pretty well. So it fared okay despite the turmoil. And the 5K ES, what a ride and a half. Let's shrink this baby because we just had so many different opportunities. And this is again where I don't prejudge where people want to be as far as short-term swings, because in some of these cases, these short-term swings were 30, 40 points either direction. And so whether you were long biased or short biased, there's room for everybody, and that's a normal market. Because in any given day, you should have those kinds of swings, very fewer trend days. Yes, we had an expectation the bias was generally going to be lower, but still a lot of these produced, very valid signals, and then they also produced some really excellent short calls as well. So here we had a primary signal. It was interesting, came down, touched the 50%, came back up again, and produced a little bit more of a minor signal where it was just steel dipping, though you didn't have the orange, but it was still a continuation from that previous setup, even though it had based a little bit. It never got back up to the highs, and then that led to the next breakdown from there. And then we ended up with a couple of little small buys that just kept getting to the 50%. This was the most decent one that actually gave a little bit more, and still never couldn't get cyan below red on any of these. So the bias for lower was mitigated to some degree. So there was a lot of bullishness through a lot of these. The problem was you just knew they weren't sustainable because you couldn't get that reset of the steel. The best you had was down to the -7, and that's nowhere near getting into the oversolds. Like I actually had down here, where it actually came down below. Would have expected a little bit more out of that than it produced. It moved back to the highs, so I think kind of an interesting action. Particularly, we have the rising lows. You expect that low then to be touched when you're up there, and sure enough, the flat line on the highs, and it came right back down to those lows. And then when you have the lower highs coming, you expect to run back up from the plateau, not when it's declining still, it's once it got flat, and made that move right there. If you waited to the 50% in this particular case, from the 26.95, and it went all the way up to 27.08. So it's that used to be the entire day's range on a given day for months, and so that just became this short little window right there. And then you have the massive fade off again at the end of the day. People locking in just to make sure they don't get caught in any of the volatility, and produced another little shallow buy, but again, this one coming from above. So yes, you have your signal, and then you're waiting for that cross of the steel right about up here to do it, and then it just did it again right before this collapse that's taking place. But that original, it ended the long stretch right here on that steel dipping below the cyan, right there, and you still had green underneath red the whole time. So that really not that strong. You would have expected, if you're going to have the green cross, it needs to stay above the red for sustained move. We even had a positive extreme within this right here. So that had already been filled, but it was just interesting. So a little bit back to the 23% would not be surprising. Still within a decent trend. I wouldn't look for this as a short opportunity when I get that kind of rising brown into it. It would be just understanding that I need to take a long. I would wait for that rising brown to flatten out before I would want to take a significant short position from where it is at this level. So I still think that this is probably going to hold on fairly decent and then turn around again. And you may end up with even a turnaround at a higher DOC reading, which would be positive as well. And if I look at the extreme, as long as that's not dipping below the red line or anything, I think you'd be in good shape then. So no need to keep going on. This was all good action, and look forward to continue. I'll keep posting charts as they're relevant. As always, trade well.